Hello and welcome to Business 360. I'm Shireen Pan. The headlines we're tracking for you this evening. The stock markets end in the red despite a late pullback. The Nifty drops below the 18,000 mark. The Sensex loses over 300 points. Crude oil prices remain on a tight leash after losing 9% since the start of 2023. It's the worst start to a new year for crude since 2007. Windfall tax will not provide a significant fiscal cushion. The estimate of 30 to 40,000 crore rupee benefit is under pressure as oil prices fall below $80 a barrel. Sources add the tax mechanism is likely to continue even if levies become nil due to falling oil prices. That's an exclusive. Vodafone Idea promoter Kumaramangalam Birla meets Telecom Minister Ashwini Vaishnav, seeks to nudge the centre to converting licence fee and spectrum dues into government equity. The government clarifies that equity conversion will be considered only once the telco infuses more funds. Tech layoffs continue in the new year. Amazon will cut 18,000 jobs, which is much higher than the 10,000 it had planned earlier. Salesforce will cut headcount by 10%, which will impact 7,000 jobs. Both companies say they hired too many people during the pandemic. Microsoft Chairman Satya Nadella expects the next 2 years to be challenging for tech companies after the pandemic-fueled growth, admits that Microsoft is not immune and says the tech sector must look inwards to boost efficiency to remain competitive. The government urges banks and financial institutions to be proactive on infrastructure financing. IIFCL pitches for a new infra law. The management tells CNBC-TV18 they're also in talks with the IRDA for ensuring long-term infra projects. Overall vehicle sales dropped by 6% in December after 2 months of positive festive season impact. 2- and 3-wheeler sales are the biggest drag. Commercial and passenger vehicle sales improve on a year-on-year basis. Founder President says the rural market is yet to pick up. Email addresses of more than 200 million Twitter users leaked online. This is likely to be the biggest data breach suffered by the company yet. Washington Post reports the data has been posted to an online hacking forum. A political stalemate in the U.S. Republicans yet to elect a speaker for the House of Representatives as infighting continues. This is the first time in 100 years that the House has failed to elect a speaker on the first roll call. The speaker is the third highest political office in the U.S. after the president and the vice president. Well, let's start with the market action. Stock markets declining once again with the Sensex and the Nifty ending in the red. This despite a late pullback. So we finally saw the Sensex losing over 300 points. The Nifty has dropped below the 18,000 mark. Even blue chips and bank stocks struggled for traction. The midcap index has ended though with gains. Nigel's here to wrap up the market action for us. Nigel, largely in the red.
Well, the bulls managed to dodge the bullet today. For majority of the trading session, the Nifty was under pressure and the Nifty Bank was sulking as well. But in the final hour of trade, maybe owing to a weekly expiry, we did see a bit of a recovery. The mid-cap outperformance, though, that's something that was heartening to see. And the bulls would be pretty excited looking at that because for bulk of the trading session, the mid-cap index outperformed and ended well in the green as well. An added kicker for the economy as well as for select sectors was that crude oil prices have corrected by close to around 10% in a couple of trading sessions. And that's good news from the economy perspective as well as for a couple of those sectors. But first up, the Nifty was under some pressure and some of those banking and financial names, they did come in for some selling. Bajaj Finance, well, they came out with their quarterly update and it looked pretty good by the face of it. But the street wasn't very happy that the AUM growth is only around 6% odd. That is the lowest growth that we've seen, 5.7% Q-on-Q AUM growth. It's the lowest we've seen in the past 10 years. And because of that, that was the biggest loser on the index. Bajaj Finserv as well fell in sympathy. And ICICI Bank, well, that as well did see some bit of profit taking in today's session. A couple of notable winners, though, from the Nifty pack itself. There is hope that the rural economy is going to recover. So Hero MotoCorp was higher. NTPC, the management joined on CNBC-TV18. They're talking about unlocking value in their renewables portfolio. So that stock was up close to around 2%. And Big Boy ITC did see some bit of a pullback after correcting close to around 10% from the recent high. But the big story was crude oil prices correcting by 10%, which was good. And OMCs, they did buck the trend in trade today. HPCL, BPCL, IOC, all of them did pretty well. Tire stocks, well, demand is pretty strong on ground and now input costs are cooling off. So tire stocks were some of the big gainers today, Apollo, JK as well as Balkrishna Industries. And talking about quarterly updates, well, you had RBL Bank, Marico as well as Godrej Consumer. They came out with their quarterly updates and the street liked it pretty much. So for the time being, the Nifty managed to defend the 17,900 odd mark on a closing basis. A good recovery is what we have seen. Let's see whether or not we can extend this on the upside.
Nigel, many thanks. Now, global cues. The U.S. Federal Reserve released the minutes of the last FOMC meeting, which shows that officials continue to remain focused on bringing inflation lower. The Fed officials expect higher interest rates to remain in place until more progress is made. They also cautioned against prematurely loosening monetary policy. Remember, the Fed raised its benchmark interest rates by 50 basis points in December to the highest level in 15 years. Now, crude oil prices remain on a tight leash, but this after losing 9% since the start of 2023. This is the worst yearly start for the oil market since 2007. The price of natural gas across the US and Europe has also declined sharply. It's down 25% just over the last 5 days. Fears of a global recession as well as weak demand from China are a couple of key factors that are weighing on market sentiment. Adding to that, the onset of winter has been warmer than expected, and that certainly has driven energy prices lower. Back home, as crude oil prices drop below $80 a barrel, the windfall tax is unlikely to provide a significant fiscal cushion to the government. The estimate of 30 to 40,000 crore rupee benefit is under pressure. Sources add the tax mechanism is likely to continue even if levies become nil due to falling oil prices. Sapna joins us now with more in the CNBC-TV18 exclusive. Sapna.
The government is unlikely to bank on windfall tax accruals as a significant fiscal cushion. In government's view, had Brent crude oil stayed at $120 a barrel, around the same level when the tax was first levied, the revenue gains would have been significant. But currently, Indian crude oil basket is below $80 a barrel, denting expectations of substantial gains. The government now expects to garner roughly 30 to 35 odd thousand crores March end via the windfall tax. One view also is, on a net-net basis, actual revenue gain could be further limited to 20 to 25 odd thousand crores. This is because the government is likely to lose out on corporate tax collections from oilcos, the largest contributor to corporate taxes. Even if the government is able to net that 35 odd thousand crores, there are already claims against the mop-up. Government-owned OMCs have already been compensated by 22 odd thousand crores against their LPG losses. Further to that, the government is currently discussing compensating OMCs for their petrol and diesel losses too. Estimated losses arising due to the price freeze on petrol and diesel are pegged at a massive 45 odd thousand crores. However, one view within the government is that they do not have the fiscal space to compensate OMCs yet again. But discussions are not closed yet. Officials also say it would be difficult to have a clear-cut revenue target on windfall tax, simply because the price swings on crude oil and cracks are too many. At best, windfall tax collections can be subsumed into the overall excise kitty without a separate budget head. Also, the government forego 1 lakh crore in excise revenues when it slashed duties on petrol and diesel in May last year. To an extent, the windfall tax could be used to plug that gap. All in all, it's likely that the government will continue with the windfall tax mechanism even if levies become nil due to fall in crude oil and commodity cracks.
Sapna, many thanks for joining us. So no big cushion there expected on account of the windfall tax. Now, air turbine fuel used by airlines gets cheaper in the national capital. Oil companies cut the price of ATF to 1,08,000 rupees per kilolitre from the earlier 1,17,000 rupees. This price cut will be applicable from the 1st of January for domestic airlines on routes across India. Here's the big story that we are tracking. Tech layoffs across Silicon Valley continue in 2023. Retail giant Amazon has plans to lay off more than 18,000 jobs. That's much higher than what they had planned initially. Salesforce has said it plans to trim 10% of its workforce. Both companies say they hired too many people during the pandemic. Rima joins us now with more details. Rima, the tech layoffs continue, in fact, accelerating.
Well, it's the new year, but the problems are old. Layoffs continue in the technology sector. Now, Amazon, which is the largest employer in the United States, has said that it's going to hand over pink slips to 18,000 employees. In the month of November, the expectation was that the tech giant would lay off 10,000 employees. But that figure has now expanded to 18,000 employees. It doesn't end there. Salesforce, another tech giant, has announced that it plans to cut jobs by 10% and also close some real estate offices. The company's chairman and CEO in a letter addressed to the employees, said that the environment remains challenging and our customers are taking a more measured approach to their purchasing decision. He also said that as revenues accelerated through the pandemic, the company hired too many people, leading into it takes full responsibility for that. So the question right now is, would you say the tech companies are right-sizing or are they downsizing? By right-sizing, we mean that perhaps the employee base got too bloated and now they're getting it back into their right size. So is it right-sizing or is it downsizing? And the other question is, why did the tech companies get their hiring plan so wrong? Why did they hire so aggressively in the first place during the pandemic that they now need to, 18 months, 2 years down the line, need to course correct?
Rima, many thanks for joining us. Well, I guess everyone assumed that the kind of growth that tech companies saw through the course of the pandemic would continue as is, and that the structural changes that everyone was talking about would play out, and normalization would not take us back to where we were pre-pandemic. I guess those bets are off. Now, as tech stocks continue to tumble amidst the layoffs, Microsoft Satya Nadella says the next 2 years will be challenging after the pandemic-fueled growth. Speaking exclusively to me, Nadella said he remains cautious in the short term, but continues to be bullish in the long term. The Microsoft CEO said that tech jobs have increased overall, and there are more tech jobs, but not necessarily within the tech sector, but outside of it. Take a look. Many CEOs are now talking about having to respond to the new economic reality. What is that going to mean, not just for Microsoft, but for the tech sector in general? Are we likely to see more pain, especially when it comes to retrenching, downsizing, margins going to be under pressure, guidance going to be a downside risk to that as well?
I think overall, quite frankly, whether it's for us as Microsoft or the tech sector, it's going to be very, very important to look inside and say, are we as efficient as we need to be competitive? I mean, at the end of the day, just because we are a technology company doesn't mean that we are the most efficient at what we do. And so as the paradigm has changed, as the bar has risen, we have to measure ourselves with the new bar. So definitely and also the growth picture has changed, we have to have operating expenses that need to be aligned. So definitely we are going to look at all of that, and it means that we are not sort of immune, as I said, to the global changes. But the one interesting thing to your point, though, is tech industry employment is not tech employment. Yeah. That, I think, is the key divergence that needs to be well understood, because that, I think, is positive, by the way, for the tech industry long term. Because if you look at it, overall tech jobs has actually increased. The tech jobs now are coming in financial services, in energy companies, in retail, manufacturing, and that's healthy, because in the long run, all those employees in all those industries are going to consume more tech infrastructure, right? When we think about our cloud business, long term we're bullish because of the fact that there's more employment outside of the tech industry of technical talent. And so that's, I think, what we are banking on.
No, I think you underscore the labor market resilience aspect. But, what we've seen, especially as far as the stock markets are concerned, and I know that CEOs often say that don't focus on what the markets are telling you, but they seem to be suggesting that there is significant pain in store for the tech sector. How do you read what's happening with the way that the markets have corrected, specifically the tech stocks, and what that signals?
For me, look, I'm never the one who would ever say ignore the market, because the markets are smarter than us all. I think they are reflecting on is, look, where is the growth coming from? And how should we think about normalizing for that growth? And so I think stock performance, economic performance are not exactly the same. But the key for us as a tech industry, I always go back as a percentage of GDP. The simple question to ask is, do we think tech spend will increase or decrease? If we believe software and digital infrastructure is going to be important in construction, in energy, in manufacturing, long term, then you have to be long on tech industry. But will we have to go through our own cycles around productivity? Absolutely, like anybody else. But that's at least my perspective. I wouldn't look, the only reason why I would say ignore the short term is because in the long run, we would be fine with demand. But in the short run, what we have to focus on is our own productivity and making sure we are at the efficient
How would you quantify short term and long run?
I would say the next 2 years are probably going to be the most challenging, because after all, we did have a lot of acceleration during the pandemic, and there is some amount of normalization of that demand. And on top of it, there is a real recession in large parts of the world. And so the combination of pull forward and recession means we will have to adjust. And that'll cycle through the demand cycle and, in fact, come out of it with what can be another massive growth cycle for the tech industry.
And you can catch that exclusive conversation with Satya Nadella on the Global Dialogues at 7:30 p.m. and 9:30 p.m. right here on CNBC-TV18. Now, the Finance Ministry appointed Committee on Private Equity and Venture Capital Investment has submitted its report to the government. They have recommended ways to accelerate the flow of investments into India's startup ecosystem. The report has recommended ways to also ease the regulatory burden as well as make changes to the tax structure. Parikshit is standing by with more details. Parikshit, in the budget of 2023, the Finance Minister Nirmala Sitharaman had said that this committee would be set up. It took a long time coming, but finally the committee was set up, headed by the former SEBI chief M. Damodharan, and we understand that the committee has now submitted its report.
That's right. This report was prepared over 3 months. You rightly said this committee under M. Damodharan was set up in September, and it submitted its report to the Department of Economic Affairs around the 19th of December. It had members of former members of the RBI, former members of the Finance Ministry and economic experts, and it has really gone through in detail as far as all the issues that were faced by global funds and PE VC investors in India. We learned that the government could consider these recommendations for the budget as well, especially on the direct tax side. The report has exhaustively recommended measures to remove regulatory friction and acceleration of PE VC investments. One of the focus areas was to recommend ways to support capital needs of startups in a volatile environment. Among the recommendations, the committee has said that the fund managers should not be burdened with GST on carried interest, and the tax should be imposed at the investor end, and the fund manager should be considered as a pass-through. Also, fund management service provided to foreign investors should be treated as a deemed export, and foreign investors should not be asked to pay 18% GST on availing service of domestic fund managers. The committee has comprehensively looked at requirements of global funds and held consultations with the DPIIT, the RBI, the SEBI, and the Department of Economic Affairs. The report currently is under examination of officials in the DEA.
Parikshit, many thanks for joining us. Well, let's see how much of what has been recommended by the Damodharan Committee finds its way into Budget 2023. Appreciate you joining us. Now, here's the latest in the ICICI Videocon case. The special CBI court in Mumbai has rejected Venugopal Dud's application challenging his arrest. Dud's legal team has told CNBC-TV18 they will now approach the Bombay High Court seeking relief. The government wants banks and financial institutions to adopt a more proactive and synergistic approach on infrastructure financing. Financial Services Secretary Vivek Joshi told my colleague Sapna Das at the meeting of financing needs of new infrastructure projects, which are in sync with project realities, is the need of the hour. She also spoke with P.R. Jaishankar, the MD of India Infrastructure Finance Company. He said there is a need for an infrastructure law. Take a look.
Banks, financial institutions like IIFCL and the newly established DFI, NAFBID, are expected to play a crucial role in financing of these projects with a share of about 30%. To achieve this objective, there is a need for a proactive and synergetic approach to be adopted by the banks, FIs and DFIs. Meeting financing needs of new infrastructure with products which are in sync with project realities is the need of the hour.
Institutions which are more protective of the interests of all the stakeholders in the infrastructure sector, be it the concessionaire in the private sectors, investors, lenders, and the public authorities in ensuring the kind of public utilities in quality as well as in terms of price. So all these things packaged into an institutional system is what an infrastructure law will comprise of. And this is very much in vogue in many countries. And perhaps it's time for India to look at such a law.
Well, here's another important story. Vodafone Idea promoter Kumaramangalam Birla met Telecom Minister Ashwini Vaishnav, urging the government to convert the company's license fee and spectrum dues into government equity. However, sources say the government is firm in its stance that unless the promoters infuse further funds, equity conversion will not be considered. Ashmit standing by with more. Ashmit, this is something that you've been reporting on. There has been no clarity on the government equity conversion. It seems that it's stuck on the issue of the promoters infusing more capital, but are they likely to?
Well, no suggestion and no confirmation, at least coming from Kumar Mangalam Birla on that. And that was, in fact, something that the government was seeking clarity on from Kumar Mangalam Birla. Now, as you correctly pointed out, it's increasingly looking like a stalemate here. The issue has been pending consideration for over 15 months now. The issue was cleared by the cabinet back in September of 2021. Since then, the approvals have been managed by between SEBI and Finance Ministry. They granted approval by May and June of last year. The concern, however, that was raised by Kumar Mangalam Birla in his meeting was to, in fact, nudge the government towards taking a decision on the equity conversion that has been, in fact, waiting for clarity. Now, the government, on its part, however, has made clear a couple of reservations. Number one, they've said that it is for the promoters, in fact, to come forth and bring in more funds. And number two, it is only after that fund infusion will the government seriously begin to consider and take an action on that proposal for, in fact, converting government debt into equity. And that is something which, in fact, is holding back this entire process. As far as fund infusion itself is concerned, no commitment has come from Kumar Mangalam Birla to the DOT, to the government in terms of any timeline or any quantum of funds perhaps that can be committed towards Vodafone Idea. No clarity on that front. And therefore, this stalemate situation continues with either of the sides waiting for the other to act.
Well, yes, the stalemate continues. Ashmit, appreciate you joining us. We will head into a short break, but up next, the Delhi police have identified the man who reportedly urinated